Thanks a lot for that, Devin. Well, let's focus on some of these cement companies and let's understand why some of these companies have come in for pressure today. Well, if you look at it in the last few days, actually, some of these cement stocks have been buzzing on hopes of consolidation, hopes of, better pricing that's coming about. But in today's session, actually, cement is seeing some selling pressure. Ramco Cement as well is down closer around 2% odd. Let's give you a few reasons. First off, weak pricing. Pricing is under pressure. It's been under pressure for 2 straight quarters. Quarter 4 of the last last fiscal, that's quarter 4 FY24 was weak. Quarter 1 FY25 as well was weak. And now we have the monsoon, so pricing pressure is likely to remain weak. In fact, in the month of July itself, we did see that there was some trepidation on pricing. And in June, prices were down by 1 to 1.5%. On a sequential basis, if you compare quarter 1 of this fiscal with quarter 4 of last fiscal, pricing is down by around 2 to 2.5%. On a year-on-year basis, the prices are down by around 5% odd. And dealers are hoping for price increases, but that's not really coming about. So that's on pricing. Point number 2, volume growth is a little bit soft in the first quarter of this year because we had the general elections. So the growth actually was only around 3.5% odd. If you compare it with quarter 4, growth was around 9-10%. Even after the last full fiscal, it was up by nearly around 9 to around 10% odd. So in relative terms, the growth on a year-on-year basis is a little bit softer. But point number 3, you put both of them together. That is weaker volume growth as well as weaker pricing. Well, it will result in EBITDA per ton coming in lower. And Jefferies has put a couple of data points to it. They're saying on a sequential basis, EBITDA per ton will be down by around 130 rupees. And on a year-on-year basis, it will be down by close to around 40 rupees. Point number 4, well, there's a scramble for market share. The larger players are getting bigger, but they want to maintain their market share. So they're consolidating, buying out the smaller entities. Smaller entities, either they sell out or they'll struggle. So you're seeing some consolidation, but there's a push of volume, and that's what's going to keep pricing under pressure. The street, though, is waiting by for some kind of consolidation in the sector. A couple of reports suggest that maybe there'll be a couple of assets that will be picked up. My ear to the ground as well, I believe there are a couple of assets that will fold up in the next 6 to around 9 months or so. In the last 6 months or so, though, you have seen those 3 big deals that have taken place, and all of them in South India. So let's see whether or not there is more in store. But for the time being, weak pricing, tepid volume growth has kept these stocks a little bit subdued today.
You know, in the paper today, I think there was one story about Ultratech Cement, which is now once again in the race to acquire Orient Cement.
That's right, Rima.
One of the pink papers reported
that's something that's been reported for the recent past, and logically, actually, it sounds, on the cards, if in case. But though we have the Orient Cement management that keeps denying it, everything is good at a price. So maybe, when we first interviewed Orient Cement, when I had gone to their unit in Hyderabad around 15 months or so ago, at that time they denied it. But the stock price was around 110, 120 rupees odd. Currently, the price is around 311. At a price, everything could happen. So let's see whether or not this deal is waiting by to happen. Orient Cement folding into Ultratech Cement. In the last year or so, various papers have reported either the Adani Group or Ultratech will look to gobble it up. It's a good asset. They've been struggling with volume growth. So let's see what happens. But that's one of the lone rangers that's up close to around 1.5%. Let's get in.